Thank you very much, ladies and gentlemen, for joining us here at this special CNBC TV 18 post-election panel discussion. We've got with us some of the most influential voices who can take us through what they feel is likely to happen as far as the economy is concerned, as far as the mood in the market is concerned, and with key crucial reforms. Without further ado, let me introduce our esteemed panelists here to you tonight. Arundhati Bhattacharya, the chairperson of State Bank of India; Aditya Narayan of Citi; Sajid Chinoy, the chief economist at JP Morgan; Vikram Mehta, the former chairman of Shell, now with the Brookings Institute, sits on the boards of companies like L&T and Mahindra & Mahindra. In a short while from now, we'll be joined by Madhu Kela. My first question to you, Arundhati Bhattacharya, there's so much hope in the air at this point in time. Expectations are running high that Mr. Modi is going to storm Delhi, that he is going to wave this wand, and the economy is going to, from sputtering, is going to start revving up. In terms of executive action, forget legislative action for a minute. In terms of executive action and executive decisions, what would you like to see in the short, immediate term for us to be able to say, all right, we have the context now for the growth engines to be kick-started?
First of all, let me tell you, one of the major things that has happened, and which you all have also underlined, is the boost to confidence. I think a positive sentiment is absolutely essential for any industry or any economy to perform. So that, I think, has already been achieved.
So just the fact that we have this kind of a mandate, you think that is a confidence booster enough?
Absolutely. It's a huge, huge confidence booster. You've been seeing the way the markets are reacting. And why I believe the markets are very important, as you know, especially for banks. There has been a lot of talk about over-leveraging by corporates. One of the reasons for over-leveraging by corporates is their inability to raise capital. Now, the inability to raise capital stemmed from the fact that the sentiments were negative. And now that the sentiment has turned positive, this will definitely enable a lot of our corporate borrowers to go to the market and raise the necessary capital that they in any case had planned to raise, but which they had put on hold because the valuations were just not available. So that is going to be a major booster for the economy, for the quality of our asset book. So overall, I believe this is something that we are really looking forward to. But you talked about executive action. One of the things, in fact, I think one of the other bankers has also said in the first reaction to the elections was the fact that we really wish that, the bills that are held up and not paid on account of various reasons, various disputes, that there is a dispute resolution mechanism that the government puts in place very quickly to enable these bills to get paid. And these bills could be with the central government, with the state government, with many of the PSUs. But this will definitely help, because many of the major projects that are being undertaken at this point of time, if the bills don't get paid on time, then the subcontractors and the people below that and the suppliers, they all get impacted. The whole chain gets impacted. And the entire working capital cycle starts getting extended and the stress comes in. So once these bills start getting paid regularly, you will find the stress getting released in the system, getting reduced in the system. So payment of bills, and if it is necessary, then to have an arbitrating mechanism to get it done as quickly as possible, and not to have to go to the High Court for every single bill in order to get it paid. That's one. The second thing that they can also possibly look at is, in many of the projects, while CCI has cleared them and while they have started moving, many of these projects have several agencies which are required to coordinate and collaborate. For instance, in a road project, it is not only the Highway Ministry or the National Highway Authority, it is also the state government, it is also the railways, because they have to lift up the bridges or the railway lines. So there are several agencies involved in every project. Now, every project, if it can have a small working group to ensure that all of them give the whatever is stuck up at one point of time, instead of having to pursue with the several agencies, this also will speed up project execution, and whatever is still held up, that will get released very quickly. So in very short order, actually, a lot of things can happen. If these two things, these are very simple things, these are on the table, if these two things start happening.
Arundhati, short points. Can you say that in terms of quantum of NPLs, the worst is over, that incrementally we will add less than we added in the fourth quarter. At least that can you say for the system?
No, I cannot say that for the system. My own results are coming in the middle of the week, so I will not say that.
Which is why we didn't ask you for your banking specifics.
Which is why I'll not say that. But, I'll go back to what I said even in the last quarter. I had said, give us 2 quarters after the GDP turns. I stick by that. You should give the banking system 2 quarters after the GDP turns. Because again, as I said, it takes time for the whole thing to sort of, get into the system and work through the system. It has to flow through various agencies. It has to flow through various layers. And which is why I'm saying, the shortening of the working capital cycle, the opening up of the capital markets, 2 very, very important parameters to get the stress down in the system. If both of these happen, surely you should be seeing the results of it 2 quarters down the line.
Okay. Aditya, just taking it from what Arundhati just said, 2 quarters after GDP turns, what's your sense? When does GDP turn itself? I mean, the stock markets, as is very obvious, discounts a bright future at least 9 months, 12 months before it actually happens. So when is the turnaround quarter for corporates?
In many senses, as far as GDP growth is concerned, I think we are really looking at this year itself where GDP gets off the 4.8% low that you hit in the previous year. I think the acceleration, this is more normalization that happens from 4.8 to 5.5 or wherever people are. I think the potential acceleration, particularly on the back of the fact that there is improved sentiment, as ma'am just said, and there is a certain bottoming that you're close to seeing in the economic cycle itself. I suspect it's when you start seeing that acceleration into the next year, FY16. I think that is when you're going to get more confidence in the system, and you will be able to back up some of the bets that the market is beginning to take at this point in time, because there are, clearly the market is extrapolating some kind of a reversal, and that needs to be, FY16 is going to be a challenging year, because while everyone is anticipating a recovery in that year, it also needs to come because that risk is being built in.
Rajesh, I know your last report said that the GDP forecast for the current year is 5.3. Do you have any bets that you may be revising it by the time you come to the second half or the fourth quarter?
Lata, I think there's a lot of excitement in the last 72 hours, but we have to view this not as a T20 match, this is a test match. And it's the first morning of a long test match, and if I could extend the analogy, it's a pretty bouncy and green wicket. So I think we should worry about what GDP is 2 quarters from here, and forget worrying about the output, worry about the input. And here I'll make 2 very quick points. I think this kind of mandate, for the first time in a generation, creates the possibility of big, bold, strategic reforms, not now, not next quarter, 3 years from now.
Yeah.
The distribution part of the power sector, coal denationalization, labor market reforms, the kind you couldn't have imagined 10 years ago. But in the near term, there has to be tactical things we have to do. No one's spoken about food inflation yet. Without food inflation coming down, very hard to see the monetary policy cycle turning. There are things the government can do working with state governments, the APMC Act, MSPs. I think talking about changing the mix in the first budget towards public investment away from subsidies, recapitalization of public sector banks. Those are the tactical things that you can do now to help GDP 3 or 4 quarters down the line. I would worry less about what GDP is and focus more on what these inputs are this year and the next.
Madhukela, let me ask you, because Sajid used the T20 analogy, and the markets are, working with that analogy, at least at this particular point in time. Where do you see the markets headed in the short term, and do you believe that the next big trigger in that sense is going to be the budget?
Yeah, I think the formation of the cabinet is what we are looking at, the first trigger, because what kind of team Mr. Modi creates.
Will that really impact sentiment? For instance, if there isn't Arun Jaitley or Arun Shourie in the finance ministry, is that going to dampen investor sentiment?
No, I think the overall team is what we are talking about, and since it is few days away, let's not speculate on that, but I think the overall team, and as he repeatedly said, that execution will be done by the team. I am the guiding force. And he has said it in interviews so many times that I have all the time in the world. So we are hoping that what kind of team gets created, that will be the first signal market will wait. The second, of course, will be the budget. So the point which ma'am was making, I would just like to say that, stock markets are so well linked to sentiment that feel good has come. And that is very, very important, that the kind of scare which was there in the system, that whatever you want to do, if you do this, this will happen, that will happen. So that whole scare has gone away. And start of any economic recovery or building of corporates only starts with people's ability to take money from the markets. With that really frees you up. You see, if you are a very leveraged company, the moment you get even 5% equity or 10% equity compared to the debt, it creates a very spiraling good environment for that corporate. And I see that has happened.
Do you agree with Ms. Bhattacharya that we are at that point now?
We are already there, ma'am. Most of the companies, the stress companies, market cap has gone up by 100 to 300% in last 6 months. We are not looking at 3 days. Market has been talking about this factor for last 4 or 5 months. You look at all old economy stocks, a lot of them have gone up between 100 to 300%.
Yeah. Before I come to Mr. Mehta on exactly what India Inc. will look for in the budget, let me just complete this point with both Madhu and Aditya raising about stock market sentiment, and Arundhati as well. The sentiment does, start off, probably started on December 4th when the 4 state assembly elections gave us the writing on the wall. But Aditya, the economy is in a tangled mess. And the first budget for the first 9 months really can't do much. It will in all probability give you the bad news that the fiscal deficit is going to be 4.5 or 4.6. Let me get to more, kind of distasteful analogy. When the NDA 1 came to power, it took them a full 5 years. The best year of growth was their last year in office. Ronald Reagan, another era to which this present tenure is compared. 1980, November 20th, he's sworn in. 1981, the US markets, the DTIA, was minus 10% at the end of the year. It took 3 years of recession and rising unemployment before things started kicking off. So, is it possible that the market will be in a euphoria up until the budget, maybe a little longer, but thereafter have to lick its wounds because the wounds are so deep?
In many senses, the 3 years of near recession that you faced over the last 3 years, that I think tends to... Yes, we've done a fair amount of it. Quite honestly, I think there probably still is another 2 to 4 quarters that could well get extended. But I think the big bit is, and I think that's where you tie in with the economic cycle, that you've been slow for the last 3 years. And there are 2 parts to it. One is the economy refixing itself. But I think equally importantly, if not more importantly, it's corporates who have refixed themselves also. They might not be out of the woods, but whether it is deleveraging, whether it is looking at costs, whether it is conserving cash, a lot has actually been done. So in many senses, the sweet spot of the market is really not just the political angle, or you can argue the macro angle. The reality is you're also in an incipient economic cycle where you're close to the bottom. So the question you raised on whether the budget could be a dampener because expectations have gone up, I think if 12 months down the line nothing happens, that's going to be a problem, not a couple of months or a couple of quarters. I think there is a lot of willingness in the market to wait through till the end of this year in any case, post which then people will start asking questions.
Okay, to you, Mr. Mehta, what do you think India Inc. wants to hear in the budget itself? Is there something that can make you all reach out to your purse and put in, announce capex plans in whatever sector? Perhaps not in power, where perhaps we are flooded with a lot of power.
Or not in oil and gas either.
But do you think people will reach
that
out?
you're familiar with?
I think the fact is that there are severe structural issues still to be contended with in this economy. We have a financial problem, and the government will have to consolidate the fisc. And the budget will have to look at ways in which they can cut expenditure, whether it's by reducing subsidies, whether it's by cutting back on some of the wasteful expenses that have been incurred. So that is, I think, one very important signal that India Inc. will look at. Are we able to actually contain the fiscal deficit? I think the second thing that India Inc. certainly would look for is, will there be a signal to the Reserve Bank, for example, with regard to the monetary policy? Now, there is this sort of tussle between inflation and growth, and there's no doubt that we cannot have high growth or sustained high growth if we are living in a high inflation environment. At the same time, there are severe supply-side issues that have to be tackled, and the question is whether or not inflation can only be addressed through the monetary instrument. or whether we should actually look at a combination of monetary, fiscal, and supply side sort of instruments to tackle inflation and revive growth and also create jobs. So that third thing, I think, which India Inc. will be looking for, what is going to be done to actually encourage not just the manufacturing sector, but also micro, small, and medium-scale enterprises. And the reason I say that is because this is what's required in order to create the jobs that have to be created to absorb the new entrants into the labor market. So manufacturing sector is important, but that's not going to be the only sector that will that can create jobs.